the K-shaped economy, and we've documented the struggles of those on the bottom part of that K, right? But as it happens, the upper part of the K is also starting to document some struggles. Now, while half of America struggles to afford food, concerns extend beyond people reporting difficulty, right? A majority are worried about affording food, with 11% reporting food anxiety almost all the time. Even people with household incomes above $100,000 are also anxious. 57% report feeling concern about paying for groceries in the past month. Wow. And that's the trickle-down effect of unaffordability, not affordability, right? A vast majority of people are using different strategies to cut back on grocery costs, with only 14% saying their shopping habits haven't changed because of inflation. That's the rich 14%, I think, right? For more on this, we've brought in our resident expert. Please welcome to the show Mr. Dale Smothers from RDS Wealth up in Kentucky, Bowling Green to be exact. Thanks for being on the show, Dale. Really appreciate your input here. It looks as though that not just the lower part of the K is feeling the pinch a little bit. There's some people, again, I think $100,000, that's a lot of money. Folks that make more than that are talking about changing their behaviors as well. Is it starting to kind of affect everybody across the board?
Yeah, exactly right, Scott. This is exactly what a K-shaped economy feels like, except now the pressure has shifted to the top of that K, and this is a trickle-down effect. Just like you mentioned, we are going to see this if it continues. We're going to see it come into discretionary spending. We're going to see it coming into travel. We're going to see it coming into dining, which is essentially what the economy is made up of. And eventually, if it stays as high as it is, and we're talking about inflation here, if prices stay as high as they are right now and continue to rise, we're going to see that affect the market. The Fed's rate that they like to look at for inflation, the PCE, came back today at 3.5 year over year. That's not a good sign for the economy. It's a good reason that the Fed probably decided to do nothing right now to see if this is transitory. There's the T word. Or if it actually continues into the future. And this is what we're up against right now, Scott.
Well, yeah. And I mean, look, if you take away the oil issue and what that's doing to inflation and inflation expectations, I think the economy's set up to do pretty well, Dale. I really do. But, you know, it's this nagging how long it takes to see the bowling ball go through this boa constrictor. You know, the bowling ball being higher oil prices and inflation. How long does it take to get through the snake, right? Because that's what we're all betting on here. A lot of people that have a much, a brighter look at things are thinking it's going to take real quick. It's not going to take very long at all. Or others say that this could be affecting our gas prices for the year. And then that also, agriculturally speaking, you're up in Kentucky, Bowling Green. There's a lot of farmland around there. That also then would affect fertilizer prices. And then we're going to have to start worrying about real food prices. The World Food Index, even just in the month of March, I don't know what it is yet in April, but it was up 2.4% in just 1 month. So that there are some real concerns there as far as longevity goes when it comes to this concern about inflation, correct?
You're exactly right. But here's the thing, Scott, it never pays to panic. And so sticking with a plan and understanding what you're invested in and how to react, perhaps, if this does come to fruition, is something that retirees need to be considering. And investors alike, no matter what your objective is, your time horizon becomes important. Here's the thing. A lot of what you're seeing right now from both sides, let's say both sides of that headline, are probably politically driven. I think we can boil that down. The one that says it's going to be over in just an instant probably is probably a little bit right-leaning. The one who says it's going to take years, where we've entered into a 10-year war, probably lean a little bit left. The reality is how long it takes to open the Strait of Hormuz and for the price of oil to come down is the hinge pin on whether or not this K-shaped economy continues, and if pressure continues to mount on that upper end of the K. My bet is that oil comes down sooner rather than later, and I think I'll look at the futures for that, not a political perspective, but rather the futures of oil. And like you said, those who are trading those futures right now believe this, at least according to futures prices, to be a short temporary type of stint. And so that's going to pass through that boa constrictor a little bit sooner. I love that analogy, looking at that oil price slowly pass through the boa constrictor of the economy. But if it doesn't, Scott, it's going to affect everyone in this economy, not as much as it affects those in Europe and Asia, but it will affect the economy.
I have a lot of guests on, are all as smart as you are, and two of them are oil experts. One I have in my radio show in the morning, and another one is on this show. And they both are singing off the same hymn sheet. And you know what that hymn sheet's telling them is they see this happening fast. They believe oil is going to come down quicker than a lot of other people do. And because of the height of the oil price right now, there's a lot of production being they're running overtime. People in the industry are trying to make money. They got $100 oil right now, right? Well,
for sure.
They say that they could see oil back into the 50s. Maybe even the 40s on the other side of this. So we'll have to wait and see. But it's some pretty radical calls to the downside. Now, that's not getting a lot of airtime. The airtime gets to the calls of $150 to $200, right? Everybody wants to talk about that.
Sure.
But the people that I trust and we listen to on this show are calling it to be quickly back down to the 60s and 50s, by the end of the year. So we'll see. I'll give you the last 10 seconds. We got to jump.
And that's exactly why you shouldn't panic. Stick with the plan. Be prepared for the worst, but be positioned in a way to where you can take advantage of the optimism that will flood into the market when oil comes down.
Awesome stuff. Great to have you on the show. Love it that you're a neighbor. We got to get together soon for maybe a couple glasses of wine and a cigar. Love it, brother. Thanks for being on. Have a great weekend.
Good to see you.